Joining us for more is George Arison, co-founder and co-CEO of Shift. SPACs are having quite a moment when it comes to raising money in the capital markets. George, why did you go this route, and what sort of risks do investors need to know about the unusual structure?
Thanks for having me. SPACs are very popular these days, and I think it's because they allow companies to raise more money than a traditional IPO, and they bring deal certainty because you do a PIPE before you announce the SPAC, which is done in a less amount of time than the normal IPO route, and then you do the SEC process after you do the PIPE. So for the company, there's a lot more deal certainty. For the investor, there's a lot more deal certainty, and you're able to raise a substantial amount of capital. So it's a pretty good way to go, especially in the current market environment.
I mean, SPACs having quite a moment. So is second-hand car sales. What's driving that?
Well, I think a few things. One is people are not doing public transportation. They're looking at alternative ways to get around, and used cars are a better way to go versus new cars. We all thought that prices would actually fall post-lockdowns being lifted, but the opposite has happened. Actually, prices are up pretty dramatically, and sales are up really dramatically. Plus, in a recession, usually people transition towards buying used cars versus new cars. We've had many years of record sales on new cars, and so in this environment, you'd expect used cars to sell more. And then lastly, people are actually really quickly transitioning to digital sales versus in store. I saw a survey the other day, something like 40% of people said they would never go to a dealership these days because of COVID. And auto is the one kind of frontier of retail that hasn't really transitioned to digital yet. So it's a great opportunity for us and other players online to really help consumers buy cars.
Is that going to be a permanent shift, George? When economies reopen, aren't people going to go back to dealers and do, the handshake deal when buying a car, test drive it, get in it, look at it, feel it? Or you see this changing permanently?
Yeah, once trends change, usually they change for good, right? It's hard to go back. And plus, this is something that I think all of us expected to happen at some point. It just, in what I've experienced in the last 4 or 5 months, has been what I expected to happen over 5 years in terms of how quickly people are realizing that behavior is going to change and how consumers want things delivered to their house versus having to go into a store. So my guess is this is going to be a long-term trend. We'll obviously see what happens, but it's going to take us a while to get out of the environment we're in today.
George, how many financing deals or how good financing deals are there available for second-hand car sales? I mean, there's such attractive offers when you're buying a new car. Does that drop away for second-hand cars? Are people just, in fact, buying them outright with cash?
No, loans are a huge part of the industry for used cars and for new cars. And most people still finance a vehicle, whether it's for a used car or for a new car. It's true that OEMs will oftentimes absorb the interest rate costs on behalf of the consumer, so you're paying virtually no interest rate when you buy a new car. That's not the case with used cars, but they're really good lenders, many of them, all the traditional banks, and a lot of non-traditional lenders as well that you can get loans from. Shift does it all digitally, so you go to shift.com, apply for financing completely online, no human having to engage with you or any papers to sign, and you can get a loan completely digitally. It's actually a really amazing, simple experience for a consumer today.
George, thanks so much for joining us.
Thank you very much.